Good morning, gang. Welcome back to Market Talk Monday. Isaiah, how are you doing?
Good. How are you?
Another exciting past week in the market, and kind of the same old story, which is markets are just driving through bad news, some good news, some things that we still don't know. So we're going to talk through a little bit of that today.
Yep.
So catch us up with what's going on in the market the week of the 17th here.
Yeah. So overall, we saw the S&P rose. I'm looking at my chart here. S&P rose about 1.7%. Dow was up 1.6%, and the Nasdaq was up 2.1%, with small caps leading the way at 2.4%. And U.S. Treasuries also rallied last week as well. 2 years being at 3.46%, and the 10-year Treasury yield being at 4.01.
Yeah.
Go ahead.
Yeah, I was just going to comment on, the markets as a whole are still just driving through things that would normally in the past have been a little scary. We still got a war going on between Russia and Ukraine.
Yep. So, that's Zelensky actually came in last week and talked to Trump, and that kind of eased a little bit of the geopolitical sentiment. Trump is expected to have a meeting with Putin in Hungary, I think in Budapest. They're expected to sit and meet. I heard some news articles I was reading over the week that Trump was maybe going to send high-level advisors to go meet with Putin, but I think he's actually going to go and sit down with him. And then I know Zelensky came in to meet with Trump to talk about Tomahawk missiles. I think Trump kind of put the kibosh on that for now in fear of escalation, because Tomahawk missiles, he said we also need them too to protect ourselves, which we do.
Yeah.
But I think it does cause a little bit of an escalation. I think the markets would have reacted a little bit. I think riding the highs of the fragile ceasefire with Gaza and Israel, or Hamas and Israel, I think the world's kind of riding the high of that, and hopefully can carry some momentum on to put a kibosh on the almost 3-year Ukraine-Russia war.
Yeah. So moving forward, when you look at the last quarter of the year, as a financial betting man, where do you think the markets?
I think
do you think they end this year?
I think we'll end up positive this year. I think especially with the Fed cuts, they have a 99% probability we're going to see another 25% basis cut, or 25-point basis cut. I said 25%. 25-point basis cut.
0.25%.
Yeah, 0.25% rate cut in October, and then it's a 94% probability we'll see one in December. So I think the markets will continue to ride on that. Where we land next year, I don't know. I don't have my crystal ball. It hasn't been working, so.
Well, the reason I ask is that when I look at the rest of the comments made by Darren Levitt and the team at Foundations, obviously he's reporting data, and the data's all positive.
Yep.
But one of the things that still kind of bothers me a little bit is that gold has now hit an all-time high. It's at $4,200.
Yeah, I was going to bring that up, and usually when you see gold hit highs, that's a sign that there's a little bit of fear.
There's a whole lot of fear to go from 2,000 to 4,200. So
yeah, every time, and it is something that, again, Dalio brings up all the time. Is you see markets continuously being overbought, and you look at the Treasury, and also I think we could be riding a little bit of. I think the tariffs played a part in September. I think we had a record earning month in September for tariffs, and I think it was one of the first times in a while that we had a surplus, and we met what we had to meet in September, and then some with tariff income and tariff revenue. But we also had some strong reportings from major banks. Goldman Sachs, J.P. Morgan, Wells Fargo, Citi, Bank of America, Morgan Stanley all beat earnings expectations.
Wow.
So the banks are driven by strong trading, what Darren is saying, strong trading and investment banking. But yeah, I do agree with you a little bit on the gold. So gold hit 5.8% to a record $4,212 an ounce. marking the
amazing.
biggest weekly gain on record.
Yeah. There's a guy that I follow out there in the market related to gold. His name's Peter Schiff.
Uh-huh.
So Schiff Gold, Euro Pacific. He has been calling for this rise that's going to happen in gold, and he's finally got it right.
Yeah.
Sooner or later, the clock strikes, and you can at least get it right twice a day.
Yeah.
And so now Peter Schiff is saying, hey, here, I told you so. Look, the economies of the world are starting to crack.
Mm-hmm.
And, when we think about this and we think about the bull run that our U.S. markets have been on over, really since 2009,
Mm-hmm.
I think all of us as advisors, when we're talking to our clients, we still need to talk about the rule of diversification.
Yep, absolutely.
That because we can't predict what's going to take place and we can't fully tell you with 100% confidence what's going to happen in the markets, you have to have a well-diversified portfolio to be prepared for those unknown downturns.
Yeah, and that, again, I know I bring him up a lot, but I respect the crap out of Dalio and what he does, and I think he brings up a super interesting point. You can't predict, but you can look back at history and deal with some of the things that we're seeing now. You're not ever going to get the exact date and the exact time right, but you can look back even past 500 years of what countries have been dealing with and these huge cycles that they go through. And number one is he has a book called The Changing World Order. You see the change of the world order. Usually that starts with what you see. You see it rise. So a new power becomes the new world order. Their currency becomes a reserve currency. And then you start, once you hit this pendulum, it peaks at the top. And then you start seeing the second step, which is internal conflict. Mm-hmm. And now I'm not on here saying that the U.S. is going to fall and we're not going to be a world superpower and all these things. But we do see, if you look back at history, I can see where he's making the point of, hey, we're on this top of the pendulum, and we're having internal conflict from the left to the right. You see that, and then the next phase comes external conflict.
There's a certain dismantling that I think Dalio and a few others out there that fall into his mindset and way of thinking. They're just saying, hey, be prepared that you're not the big dog anymore on the corner, and that you're going to have to be used to taking orders from other sovereign nations versus giving them out.
Yep, absolutely. And again, when people hear on this third step, they hear external conflict and they think big world superpowers go to war. External conflict doesn't have, like internal conflict right now, we're not up in, like right and left is not up in arms shooting each other. We're not at a war, civil war or anything, but you have an external conflict, which could be trade wars, could be Cold Wars, all of these different things. And right now, an external conflict is a technology race. Yeah. So instead of, in the 1960s, we saw the Soviet Union, the U.S., we went through this big arms race, basically.
Yeah, the Cold War.
Yeah, first one to get to the moon kind of thing.
Yeah.
Now we're kind of seeing that with whoever wins this technology race this is what Dalio is calling for. Whoever wins is going to be the top dog. So it's not necessarily, I know there's the whole rhetoric of Taiwan and China and Russia and NATO and all these different things culminating into one. But really what they're getting at, and what I think these hedge fund managers are really getting, these big dogs are really getting at, is a technology race. Whoever has the best technology and wins this AI technology race is going to lead the world.
Yeah.
And then he has this thing called reserve currency. So the U.S., most of the trading that happens in the world is dominated by the dollar.
Right.
Everybody accepts the dollar. Everybody recognizes it. So when you see a changing of a world order, you could see that there could be the possibility of another currency dominates world trade.
Yeah. So countries could settle in the yuan versus settling in
instead of settling in a dollar.
Yeah.
I think that, in my personal opinion, I still think that's a long ways away. I think the U.S. dollar's still relatively strong, because if you look at how things are consumed, we make up, third of the world, or third of the population, and we consume over half of it.
Yeah.
So we're still driving the global economy as running as a third of making up the entire population of the world.
Yeah.
So
Well, no, I think population of the world, we make up less than 5% of the world's population.
yeah,
But we're so you figure 7 billion people, we're 370 million.
yes, we're not quite a third.
But I think what you're alluding to is that we're consuming over a third of the world's goods.
Yep.
So to that, consumerism is still wagging the dog.
Mhm.
So the power of the U.S. consumer seems to be the thing that's driving. Is that
Yeah.
effectively what you're saying?
Yeah, effectively what I'm saying, and also I think in the U.S., I think again, Dalio said it best. You could have there's a sediment in the U.S. You could have a blue streak in your hair. You could do all these different things, but if you have the skill set or the innovativeness to invent something or become something, you could be a business owner. I still think that's where the capitalism mindset is leading the world, because if you look at it, the U.S. has driven a lot of different things going on, and our technology is superb. We have the best technology, in my opinion. China's a close second, but I still think we're leading. We're leading the arms race. We have the best. We have the best military equipment. Still the strongest military. I still think U.S. is driving and makes up. I'm throwing random numbers out here because I don't have the stats right in front of me, but a majority of everything that's happening.
Yeah. Well, the U.S. certainly has a command over technology. We have a command over what's happening in AI, but I think both of us are in agreement that China is certainly making a run for being the king of tech, being the king of AI, being the king of the arms race.
Yep.
And there is no doubt that China wants to be the superpower.
Yep.
And so, what does that do to, if they win at that, what does that do to our economy? Well, I think you could see things arguably get really expensive.
Yep.
You could see, a world of hyperinflation, and that in and of itself can create a great disparity. So the key here is diversification.
Yep.
I'm going to beat that dead horse to death.
Mm-hmm.
You can't have all your eggs in one basket. You can't necessarily just depend on equities by themselves to be the answer to all of your financial strategy.
Yep.
So it's managing that expectation of what we think could happen by planning as if it does. And so what do we do with our dollars? We should diversify.
Yeah.
I think that's going to be the global right answer when you don't know what the right answer is.
Mm-hmm.
As Donald Rumsfeld used to put it, that's the unknown unknowns.
Yep.
So we can have known knowns, we can have known unknowns, we can have unknown knowns. And the unknown unknowns that are ahead of us requires us to have a little bit in each of your pouches or each of your, if you think of it like dry powder.
Mm-hmm.
If you're a hunter or a shooter and you're using black powder, the key is keep your powder dry.
And
keep some on the sideline.
And when you have that on the sideline, when it comes to, you see a huge downturn, and if you plan accordingly, some people will be like, oh crap, I'm losing 20%. But some people, if you plan accordingly and you have things set up that if we do see a downturn, doesn't destroy you.
Right.
There should be a little part of you that has a little bit of excitement, in my opinion, if you're well diversified.
Yeah.
If you see a downturn, things are on sale.
Right.
And I have Charlie Kirk. Back in 2020, the huge COVID thing, what he ended up doing is he believed in the full strength of the U.S. economy. And do you know what he did? He took a bunch of money and bought triple leveraged QQQ. Mm. And when he did that, all the guys that were interviewing him were like, why'd you do that? And he's like, well, I didn't think that the Dow was going to be down at 20,000 forever, or wherever it was trading at, wherever he said. I'm not quoting him perfectly. He's like, it's not going to be there forever. He's like, the U.S. is going to bounce back. And he's like, the COVID pandemic, if you look at that just in that bubble, he's like, it's self-inflicted.
Yeah.
We're the ones that shut everything down, made everybody go home. He's like, we could just turn it around, and guess what happens? And he was right. The markets skyrocketed back up. And I mean, granted, it's a little ballsy to go buy triple leverage QQQ. I'm not telling anybody to go out there and buy triple leverage QQQ, but I mean, he took his bet on the U.S. and
Yeah.
paid off.
Yeah.
But he, again, diversified. He was diversified. The COVID crash didn't have a huge play on him. Especially, I mean, most of his assets, I would assume, were in his company that he created.
Turning Point.
Yeah, that he created. So he was diversified through his business and all the different things that he had. But yeah, if you're well diversified and you see a correction, it could be an opportunity to make more money.
Yeah, I think that's the key you're going to hear from us, folks. Is much of the same over the last few weeks. You've heard Isaiah and the team talk about the markets are going up. They're still going up.
Mm-hmm.
So not much new news. There is some changes occurring. We're seeing gold go through all-time highs. We're seeing a little pullback in real estate applications.
Pullback in Bitcoin.
Pullback in Bitcoin. So there's some signs out there that there's some weakening occurring. So stay tuned, stay diversified.
And the last question I have for you, and this is more for you. I've read a lot of things that people think by 2030, Bitcoin could be up to $350,000 a coin.
Mm.
What's your thoughts on that? I want to pick your brain on that.
Well, the tea leaves don't tell me a ton. The little bit of knowledge that I have and the research that I've done in that space would tell me that there's a high probability that could happen.
Mm-hmm.
I think if the Trump administration really brings together a team of folks to create, say, a sovereign wealth fund,
mm-hmm.
and they put something like Bitcoin into that sovereign wealth fund,
mm-hmm.
I think it's easy peasy. It goes over 300,000. It could probably go over 500,000. But one of the things that resonates in the back of my mind is Jamie Dimon of J.P. Morgan. He goes, governments aren't in the business of letting you do whatever you want to do.
Mm-mm.
So the idea that Bitcoin is going to be this decentralized
currency forever.
Currency, it's a pipe dream.
Mm-hmm.
There's no way in hell that any sovereign nation is going to allow that to continue long term.
Mm-hmm.
Sooner or later, they're going to control it. Now, the flip side of that is if the U.S. government came in and said, okay, we're going to buy up half of the outstanding Bitcoin out there,
mm-hmm.
they now control it,
yep.
right? They now have control over it. But that could drive the price way up.
Mm-hmm.
So in some ways, I think long term, the U.S. government is going to enter that digital currency market in a big, big way.
Yeah.
And if they do, I think it could solve a lot of our national debt issues.
I think the U.S. could play a big part in that commodity space. I lump Bitcoin in with the commodity space. And I think it would be kind of silly not to think, if you look at what's going on in the world, Trump talking with Putin, what does Russia have? They have a ton of oil. I think there's a way, and I think it'd be silly not to think that Trump's in there. He's quite the businessman, love him or hate him, he's a businessman. But when he sits down with Putin and he wants to end this war, I think there's a possibility, too, that the U.S. could have some sort of deal worked out once the war is over and if Russia wants a piece of Ukraine or whatever they have occupied, I think there's a slim chance that Trump slides a deal to Putin for Russian oil at a very, very discounted price.
Mm.
Interesting. I can kind of see that playing out because especially here, you look at oil. Oil is down 3.1% to $57 a barrel. A U.S.-India talks aim to limit Indian demand for Russian oil.
What's crazy in the U.S., Isaiah, is that at $57 a barrel, the last thing I remember reading is that anything below, I think, $65 a barrel, most U.S. oil companies, there's no incentive to refine the oil. Mm-hmm. Like it costs them now to refine the oil to turn it into, the derivative products from gasoline to plastics.
Mm-hmm.
So It's interesting that oil is as low as it is now, and we still have an infrastructure problem in oil in how we refine it. So more to come on that.
Yeah,
But as it relates to the whole Bitcoin world and sovereign funds, I mean, I think there could be oil, there could be a crypto coin, there could be land in the sovereign fund. I mean, Saudi Arabia is already doing it.
Yep.
Norway's doing it, and it's been successful for them. Why not?
Yeah.
We shall see.
Yeah, absolutely.
Stay tuned. Thanks for allowing us into your homes and allowing us the opportunity to share commentary with you. Obviously, don't go make trades on this personal communication.
Yep, absolutely.
And talk with your advisor. Make sure you have a plan.
Conversation.
Make sure you have a strategy. And smash the like and subscribe button. You'll be glad you did. All right. Hey, take care, folks. See you soon.